Hello and welcome to BQ Prime. I'm Hira Dadia. Joining us on the show today is Rakesh Sharma from Bajaj Auto to discuss the way ahead for the company and the sector as a whole, taking into consideration this is one of the sectors which is showing us green shoots as well right now. Rakesh, welcome to the show. Rakesh, overall, in terms of the third quarter, there have been a few tailwinds that have actually helped us from a margin perspective, from a forex perspective. But overall, if you see in terms of business, how is the setup looking like, dividing it between domestic and exports?
Good morning, Hiral. Yes, I think that the turnaround has occurred really after the festive or during the festive. Till before that, underlying numbers, retail numbers were suggesting that there is a decline in the industry. Even though quarter one was looking positive because last year there was a COVID effect. So if you normalize for the base, we were experiencing till October negative growth in the motorcycle industry in domestic. Festive was good. December was again negative in retail terms. However, I'm not bothered about that because whenever December is too close to the festive, that effect is always there. But when we sanitize all the numbers, we find that the industry is back to 3% type of a growth, which is good because till now, for 2-3 years, it has been constantly in decline. So it's a little bit of a turnaround in the industry. The character of the whole turnaround or growth story is very interesting. The industry can be divided into two halves. The 125cc and above, which is about 50% on the industry now, and the 100cc. So the 125cc plus segment is growing at almost 3-4 times the rate of the 100cc segment. So hopefully, as quarters advance, the economic recovery will percolate down into the pockets of the entry-level commuter also, and things will improve. But right now, yes, the industry is in low single digits growth and really being powered by the upper half of the industry. In the export side, just to complete the story, domestic three-wheelers, there is again a smart recovery, which is, so we are now in the industry at about 75% of pre-COVID levels. Here again, the growth is being driven by the expansion of the CNG network and people shifting from diesel and petrol to CNG because of the tremendous advantage of operating costs. And that has really driven. So 2 years back, CNG was only 20% of the three-wheeler industry. Today it is 65%. And this is good news for us because we have a very, very high market share in CNG, 86% or so. When it comes to the international markets, the emerging markets are reeling under inflation, which has really been caused by the sharp devaluation of their currencies against the US dollar. A little bit of that we have faced in India also, as you know. And because this broad-based inflation has driven prices up across categories, purchasing power has got eroded and demand is down by about 30% or so. That had started to happen from May, June, July, because this happened in March and April. But demand, I would say, settled down now. It's an equilibrium at that minus 30% level. It is not plummeting. It is not growing, though I would say that the people have digested the higher prices. And we have adjusted our stock. So we took deep cuts in shipments in the period of Q2. Q3 demand and retail and shipments are well balanced. However, the problem over there is now not retail demand, but it is the availability of dollars, which is still a problem. And I would say, and I would add the large clouds of uncertainty in Nigeria, which is about 25% of our business. It's a large overseas market where there is an election on 25th Feb. They've also done a demonetization. We are facing those consequences. So I expect that it will take probably 3 or 4 months for things to settle down. Basically, the dollar availability to improve, for Nigeria to settle down. And then I'm hoping that there will be a sort of a release of pent-up
Mm.
demand, and we will start to see a strong recovery in exports. But we
Right.
have to bide our time.
Right. So, Rakesh, that's a well-rounded, structure that you've given us. Now, when you talk about the domestic markets in terms of 125cc plus or below, is it a story of premiumization that we are witnessing in the urban markets? And is there an indication of weakness in the rural markets, taking into consideration the entry level is still slightly under pressure?
Yes, Hiral, it is all of the things which you said.
Mm,
I would not be able to put a finger on just one factor,
mm,
but rural demand is soft. It is recovering, but it is soft. The people who have the money are the slightly better to do customers who want something better, and that is why you are seeing them opting for 125 cc's or even higher. And there the economic recovery has touched these people much
mm.
more strongly and earlier than the ones at the bottom of the pyramid.
Right. And overall, if you see in terms of the three-wheeler segment as well, a lot of movement that's happening to the electric side of it, right? So how are we gearing up to meet the demand from an EV perspective in the three-wheeler space from here on?
Hiral, the movement of three wheelers to electric is not happening in the auto segment. Where it is happening is in the below the auto segment, which
Mm,
was putting some kind of a block on the expansion of the auto, which is what we call the e-rick. These are
mm,
very small vehicles, less powered. A lot of them were lead acid, but now they're converting to lithium ion, cheap, and they are invading the hinterlands, particularly in north and east. They are not allowed on the roads in south and west of India,
okay.
but north and east, where particularly Uttar Pradesh and all, they've sort of penetrated. But in the regular auto segment, the penetration of electric is still not, we are not seeing it in the way we are seeing it in the two-wheeler segment. But be that as it may, we have readied our e-auto, and it is under field trials.
Mm,
We had put it out, and we got some feedback from drivers, because they're all waiting. Because when you have a market share of 75%,
mm,
there is a lot of expectation from the brand. And we found that if we had put out our vehicle, we would not have really met those expectations. So we have
expectations.
gone back and made some adjustments. And we are hoping that we will do a selective launch by end of March or so in the e-auto segment.
Mm, right. And from a two-wheeler electric perspective, how are we balancing ourselves now from here on?
The two-wheeler electric is certainly making great strides in terms of penetration. I would say that it is, if you take the December numbers, you keep out the
Mm,
low speed, if you just keep the high-speed scooters, almost 20% of scooters is now electric, which is welcome news for Bajaj, because,
mm,
we are not in scooters, so this is absolutely fresh business. We went through a difficult time in Q1, Q2 or so last year. I mean, this fiscal, and because of the supply chain ambiguities, we have sorted out our supply chain. We have also reconfigured our product for improved costs and all that, and we have that clarity. When we didn't have this clarity, it was very difficult to expand the network, because asking dealers to make the investments in stores.
mm,
What we have decided is that, because it seems like this is a big enough industry and it's going to be there to stay, we want to set up an independent network which is dedicated to EV.
mm.
It is very easy for us to use our current network. We've got almost 4,000 stores across the country. But from a longer term or mid-term perspective, we will not be able to grow the category. We will not be able to give the EV customer a distinct retail experience if we combine it with ICE. So we had decided that we'll set up an independent network.
Mm,
But we can't do that till we don't have the supply chain clarity. Now, which has sort of emerged from September, October onwards. And we are now pressing on the accelerator and expanding. We were in 25, 30 cities and by the end of Q2. And we are today, as we speak, we are in 50 or 51. By March, I hope that we will be in about 85 cities with a distinct network. And then in the next financial year, FY24, we will expand the Chetak portfolio so that it covers some of the emerging sub-segments, because as the market is building up, different use cases are emerging which need specific product solutions. We have noted these, they are under development, and we will be attacking different price segments, different type of use cases, B2B as well as B2C type of use cases.
Right. So a good story coming in the offing. And overall, from a downside risk perspective, one is, are we seeing high amount of competitive intensity specifically in the Pulsar segment? And two, do you anticipate any further rise in terms of input costs? Because right now, input costs have come in as a tailwind. Reverse, the Forex benefits have come in as a tailwind. Now, if both of these reverse, how are we planning to deal with that part of the downside risk?
See, the competitive intensity in the two-wheeler segment is always there, as you know, that it is a very hard-fought battle place, because there are some very good companies which are competing for an industry which, if you take a long shot of 3-4 years, is actually shrunk. So there is no change in the heat map. It remains the same. As far as the commodity costs go, yes, Q3 was very good because we took price increases immediately, alerted by the cost increases of Q2, and that held us in good stead when in Q3 the costs sort of settled down. Right now, going forward, we are not getting indications except from things like aluminum and nickel, that there may be a slight uptick, but overall the commodity costs seem to be stable. But that's just one part of the story. The second part, of course, is the dollar. I don't think that the rupee is going to appreciate significantly, if at all. So I don't see any issues coming from there. But the third explanation, and the most important explanation for our surge in our profitability in Q3, besides soft commodity costs and price increases and better dollar realization, is really the richer mix. We have got a very good footprint, a great portfolio, which has been completely refreshed, which has been in play now for 3 to 4 months. We are getting indication that it is accepted. We've got, in this segment, we've got 20 different models now in the 125 to 500 cc segment. The next competitor has 13, 14. So we've got a great choice out there. And most of these models, I would say 18 of these 20 models we are getting very good. Now, all these models, the ASPs and the margins are better than what our old portfolio was. So this is the third explanation, which will continue. Then, of course, also this whole conversion of three-wheelers into CNG is very good news, because CNG three-wheelers are more profitable, higher priced for us. And like I said, now almost 75% of our portfolio has become CNG, and we have an 86% market share there. So that also will contribute to the richer mix story.
Right. And Rakesh, my last question coming to you is, overall, the partnerships that we have with Triumph and KTM, right? Now, we're very soon going to launch a product with Triumph as well. So overall, from a scale-up perspective, where are we seeing more opportunities between the two? That's one. And two, you have a lot of Indian startups now who are getting into the EV two-wheeler segment, etc. So do you see any opportunities from an acquisition perspective there?
So, to your second question, it is very welcome to have these startups, because they're all contributing to, in very innovative ways, some of them, to expanding the market. We are open for acquisitions, but we keep scanning. But they have to they don't have a brand and they don't have distribution which we have. So they really need to be having some technology which we don't have access to. That would make it interesting for us. But we would not buy a company just because they've got a one-off style or design or kind of a thing. So it's difficult to get a company which is bringing absolutely new technology which is commercializable to the table. So, but nevertheless, sometimes, they make up and we would be open to it. The we just rolled out the 1 millionth KTM. We inked a proposal with KTM in 2007, and we got really started in 2009 odd. So in what, for 13, 14 years, this is the millionth bike and spread across 80, 90 countries. The Triumph opportunity is from a market sizing point of view, many times bigger than KTM. And if all goes well and we are able to replicate what we have, both KTM and Bajaj have done together, if Triumph and Bajaj are able to replicate all that, and there's no reason to believe that we cannot, I think the impact will be of a much different scale, both in India and overseas.
But what are the timelines we are tracking to actually start seeing that impact?
Definitely, you will see it all starting in the financial year 23-24. I cannot say more than that, because as you know, this is information we would like to release closer to when it happens. And certainly at that time, we will contact all of you. We are very excited about it. It's impact.
Absolutely. Likewise. Thank you, Rakesh, so much for joining us on the show. It's always a pleasure to speak to you and really have this nice conversation, which gives us a lot of insights with regards to what's happening in the industry as a whole as well. Thank you. Stay safe. Speak to you soon again and see you soon again.
Thank you, Hiral.
Thanks. Take care.